Okay.
This week's FM cover story is about one of the most interesting developments in South African mining, certainly in the 30 odd years that I've been covering the industry. And it's about a startup company called Randgold Resources, which listed in 1997 on the London Stock Exchange. It had a bunch of exploration rights in Mali, and it owned one gold mine, which wasn't a very good one. Fast forward to today, 16 years later, that company is worth $1 billion more than AngloGold Ashanti, even though it currently only produces, for its own account, 800,000 ounces of gold, and AngloGold Ashanti produced last year about 4 million ounces of gold. The reason for that difference is that Randgold Resources has become the go-to gold stock for investors. It's given far better returns than its much larger competitors such as AngloGold Ashanti, Newcrest and Barrick. And that's why they've rated it higher. And you have the situation where that much smaller company in terms of production is worth so much more in terms of market cap. Now, to do that, the company, which is run by Mark Bristow, has evolved an operating management philosophy which works in Africa. Now, as you know, the saying goes, Africa's not for sissies, and certainly Mark Bristow has shown himself to be no sissy. He has developed 4 major gold mines in countries like Mali, Cote d'Ivoire, Senegal, and the last one is in the Democratic Republic of Congo, which a lot of people view as heart of darkness territory. You just don't go in there, it's ungovernable, you can't develop there. Well, Mr. Bristow has shown him to be completely wrong. He's brought in his Kibali mine on schedule, in fact ahead of schedule and on budget. It's one of the biggest economic developments for the DRC since that country got its independence. So all in all, a good news story for Africa. All in all, a good news story for Randgold investors, because that share price has outperformed just about everybody else in the gold price in the gold equity sector.